Hi, this is Mark from Altcoin Buzz, and tonight we're going to take a look at Bitcoin, do a little bit more of an in-depth look that we haven't done in quite a while, just so that we can get a lot of information out there to look at. And I thought I'd have a little fun today and just give you the information and try and deliver it in an informational way. I've got to explain some things that you want to watch for, but try not to steer you too far in one direction or another. Let you come to your own conclusion at the end, and then watch Bitcoin over the next few days to see if your interpretation of what I was showing you on the charts came to fruition or not. And we'll be reviewing Bitcoin again before the end of the week, or at least in the weekend. And before I get started on this 360 review of Bitcoin, let me tell you how this is going to work. I'm going to go through some of the indicators, some of the price action, tell you what I'm seeing, some of the things to watch out for. I'm not going to tell you my position at the end of the video. I'm going to let you come to your own conclusions at the end of the video based upon the information that I'm giving you. Before we do, though, I do want to thank DX.Exchange, which is a new European regulated exchange, and it's really exciting. Unfortunately, I can't sign up for it yet, but I'm excited when I will be able to. They've got fiat to crypto trading pairs right now in the exchange. You can also trade traditional stocks and ETFs through the exchange, and it's locked up in a smart contract for you, so you can buy fractionals of some of the stocks that are more popular on those exchanges. It's backed by the NASDAQ technology. It's got a lot of exciting features to it that traders should be excited about. They're also listing security tokens, which I think is kind of that next big wave of token that's coming, where your tokens are actually backed by a security. There's no fees this month, and they actually work on a flat fee basis, so you pay monthly on your fees, which is something unique and different. And the nice thing about having a full-featured exchange, obviously, is you've got the ability to do your own technical analysis right there in the exchange, so you don't have to bounce back and forth between trading view and the exchange to do your TA while you're trying to set your game plan or strategy on a particular coin. So anyway, we want to thank DX.Exchange for supporting Altcoin Buzz, and we're going to get started right now on the BTC charts. Okay, let's get started on the Bitcoin 1 week chart. This is the logarithmic chart for Bitcoin on the BLX, Brave New Coin Liquid Index chart. I'm using this chart because it takes a lot more history into account for when we're looking at some of those moving averages. Also a lot more exchanges compiled into this information. So as you're looking at the price action, one thing to look at is that the market does not move straight up and down, right? We get these tops that come in with some capitulation, a relief or reaction back to the top, getting rejected at a resistance area with a move back down, and then another reaction rally, and that continues on throughout the trend. So as we're looking at the daily action, we get all excited because we're making these moves up, and we're making some higher highs, and we're making some higher lows. It gets very exciting. But as we look at this kind of up and down action against resistance areas on the weekly chart, and look at how we've been reacting on this move down, we have this move down, a reaction rally back up to this resistance area at about $4,100. Another move back down. Now, not a new low. However, as you can see back here, we had the same kind of thing happen, right? This was not a new low for us. We made a move up and came back down, made a higher low there, but then on our reaction rally back up, we weren't able to make a new higher high. And that's where we're at right now. You want to see if we make a higher high here, can break through this resistance area and settle back in for some support somewhere in this $4,100 to $4,300 range. You want to look at the volume that you have coming in, whether that volume is declining or whether it's increasing. That's just giving you the conviction behind the move that's being made. So on this move, we're just looking at some declining volume as well. With the price moving up, that would be bearish divergence. And we can also see on an oscillator where that might fall in later on. A pattern standpoint, this could merely just be a bear flag up with a continued move back to the downside coming. If we look at some of the oscillators right now, the stochastic RSI is at the top of its range. And you can see where when it flattens out and intersects with the signal, there can still be some upward price movement. Let's just go back here. We had that flattening out and the cross, or the flattening out and the intersection of the signal and the moving average right back here. When it crossed the downside, that was when we got the breakdown. We're looking to see if this is going to break down and cross to the downside. That cross down, while it doesn't look like much right here, was about 30% of this move up. Again, it intersect back here, back in 2013, where it flattened out and intersected, and we got that cross down, and that's when our move to the downside happened. A top out back here in June of 2013. Now here, we had that top where it intersected right about in here, and that was in December of 2012. It maintained that top through December of 2012, and that sideways RSI on the stochastics was a 1,261% increase. So we could have that happen here. We could have this signal flatten out like it did back in these areas, intersect with our signal where we are at right now, and basically remain flat for a period of time and even months while the price continues to rise. The RSI had a downward momentum with some peaks out from that resistance line that you can see right there, and those peaks, once we came back down and broke through, were very significant moves. We'll look at those in a minute. We've peaked back out again over that line, and what we'd want to see is at least some support here rather than a break like we had back in these areas. Now, the positive thing about this is it's looking like it's rolling over, not a dramatic decrease down, but a rollover in the momentum, which could lead us to believe that this would find support on this line. If we just take a look at those peaks right now on the RSI, where we had this peak right here, and that was the drop back in February, peak here, that was the drop in April, the peak out here and a fail in July, a peak out here and a fail in August. Then we traded against this resistance line, and that was the consolidation period that we had against that $6,000 support. A breakdown below there, and now we've just peaked out from above that line again. And what we want to have is this now becomes support for us rather than breaking through back to the downside once more. If we go down to the 3-day, we're starting to drill down into some smaller time frames right now. Again, the weekly is still looking rather strong. We're now on the 3-day, and if we look at the 3-day, this once again the TDI indicator. Let's just take a look at it. This is where those signals come across, and we can see those drops down coinciding with the price action above. So that's what we want to see, this continue to maintain above our red signal line here. But at some point, this band is going to act as resistance against us. The top of our moving average on the top side is going to act as resistance for us, and we've got this resistance box ahead of us above too. So that's something to be aware of. On the RSI, we've got a break of this trend. We had this downward trend coming down. We had this downward trend all this time. Now we've got an upward trend starting to develop here. As long as we can maintain that trend, the RSI is on the very positive momentum for the 3-day. We did have a topping out here. We want to see that we don't double top out on the daily stochastic, because remember, we're at the top of the weekly. So now we either want that to continue to trade sideways and have our price action move up like we looked at, and that would mean that we'd have to have this 3-day and the daily stochastic continue to move to the upside. And if we just blow that up, you can see it looks like we still have some room to run. We have some indicators starting to curl over on this 3-day. The volume oscillator is definitely in a bearish divergence with the price action. We've got declining volume on the oscillator. We've got increasing price on the chart. And we've got what looks to be this potential ascending triangle, which would be a continuation of the pattern before it. So now let's go down to the 1-day. We're on the 1-day. We've had this choppy action happening over the last couple weeks. We know where our areas of resistance are. We were looking at whether or not this could be a potential inverse head and shoulders, but that's starting to just get so flattened out and weak. It just doesn't look like it has any momentum. We've got declining volume going on that I don't think we can break to the upside of that. Or rather, what you need to look at, because I'm letting you make your own decisions here, is whether what you need to look at and determine is whether or not you think that we have enough momentum to break to the upside if we continue with the volume and the momentum that we have going on right now. The MACD still to the positive. If we pull up the Ichimoku cloud on the 1-day chart, this is the USD chart on Coinbase. We've got a positive cloud that has formed. This is theoretically now where our support should lie at $3,800. That also coincides with where our 21 period moving averages, our 21-day moving averages, where we're trading over, so we should be able to find some support there. And we also have found support above the 50 period moving average. The most positive element on the Ichimoku cloud right now is the lagging span, which is starting to come and trade above or hitting resistance right now at where our resistance area is in this box, but theoretically should be able to trade above the price action where it is now. That is a bullish sign. That's this green line back here where you can see my pointer kind of following that green line, that lagging span. Once it goes above the price action, that is a very bullish sign. When it's below the price action, it is a bearish sign. Now remember, while bullish, it is not a confirmation of moving into a new trend. We are not out of the cloud yet. Once we're out of the cloud, trading above it and out of the cloud, then we would start looking at more of a bullish confirmation on a new trend developing. Now again, be concerned, declining volume with rising price action is typically weak momentum up. With weak momentum up coming into a resistance zone, you know what happens from there. The other bullish sign in my mind, again, is we are trading above the 128 period or 128 day moving average. That's this green line right here. That has been an area where when it's rejected gives us a big move down. Let's just go back and review very quickly. If we look back here, we didn't quite get to it here, but rejected from the 128 day here and a move down. A peak out above the 128 day and a move down. We hit our head on the 128 day there and a move down. And those are significant moves down. What we don't want to have happen is a peak above like we had back here. Previous resistance was met, right? Back in here, we were above the 128 day, but we were rejected for a very large reaction down. What's to say the same thing doesn't happen here? We get a peak out of the 128 day, we get rejected at the resistance that's coming up, and again crash back through the 128 down for another significant move. Bitcoin absolutely has to break through this resistance area, and you can see how many times it's tried to do that and it's just failed. 1, 2, 3, 4, a fifth time. All of those have been rejected. All right, we'll wrap it up on the one-day chart with your trading ranges that you have going on right now. In the blue trading range between $4,000 and $3,700, that's the range that we're in right now. But if we break above it, we still need to get above 4,300. We need to get some closes above there before we can start doing a celebration and a little dance and all that good stuff. We need to get above the $4,300 area right now. Let's not fool ourselves because we still have the opportunity to break to the downside and come back into this trading range between $3,700 and $3,500. That's going to wrap it up for today. Now you make your decision based upon all the information, which way you think that Bitcoin's going to break, if you think it's going to break to the bull side or if you think it's going to break to the bear side. We'll take a look at this near the end of the week or the beginning of the weekend once again together and see, because this is going to happen over the next couple days. There should be a link below to click to get to the DX.Exchange if you want to check that out. Also check out Altcoin Buzz.io when you have time. We have all kinds of great articles throughout the day on that site. And until next time, may all your trades be good ones.